Good afternoon, ladies and gentlemen, and welcome to this Insurance Europe webinar organized in the context of the European Retirement Week. Many thanks for joining us. My name is Nicolas Jeanmart and I will moderate today's webinar. The topic of the day is pension pots and how to fill them, providing for old age. An ambitious agenda certainly, but we have qualified speakers to help us navigate through it. First, Mr. Helmut Schwarzer, public finance economist at the International Labour Organization. Then we will hear from my colleague Margot Gillet-Vesentini, Senior Policy Advisor Pensions, who will present the results of our second Pan-European Pension Survey. This will serve as a basis for the panel discussion which will follow. But first, as I said, I would like to invite Mr. Schwarzer to share his perspective. Helmut, the floor is yours.
Many thanks, Mr. Many thanks to the European Insurance and to the organization of this event for the invitation to the International Labour Organization to participate. I thought being an international organization belonging to the United Nations system, that a value added that we could bring to the discussion on providing for old age is, on the one hand, a summary of the World Social Protection Report that we have just released last September, and it has a chapter on pensions in the world, and then also to speak a few words about the strategy of the ILO, the recommendations that the ILO usually provides to its constituents, which are governments, workers, and employers. So initially, the World Social Protection Report, it is available online for those who want. We also have a World Social Protection database with dashboards which follow together with the World Social Protection Report. One of the messages is that social protection coverage in the world is still very low. The ILO is in the United Nations system. Within the United Nations system, we are the guardians, or we are the responsible ones to collect information about the coverage of social security for the Sustainable Development Goals. And there is a Sustainable Development Goal number 1, to fight poverty, and target 1.3 to extend social protection coverage. And this indicator has been calculated as only 46.9% for the most recent years, between 2018 2020. That's the reference in the world. So it is still a low effective coverage rate with benefits. We are not talking here about health coverage. We're talking about monetary benefits, especially pensions. And there is also a strong heterogeneity among regions. You see in the smaller graph that Europe, Central Asia has a higher rate, Americas intermediary, Asia, Arab states, and Africa comparatively lower rates. And inside the regions, inside the countries, as you may imagine, there will be also huge differences and inequalities to be registered. But just for us to have this here as a global picture. And now regarding pensions, the pensions is the branch which has the highest effective coverage rate among the different benefits. We are talking here about 77.5% of the people aged in retirement age. It is calculated in comparison to the legal retirement age in each country. So 77.5% of those persons receive currently some form of old age pension. That means be it a basic pension, a tax financed pension, or maybe a pension from a contributory system, or a social assistance pension, or maybe a combination of different benefits. In comparison to previous years, it can be said that the pension systems in the world have expanded. In the previous edition of the World Social Protection Report, that indicator had still been close to 70%. And this can be explained mainly by improvements of the social pension systems in many countries of the world, especially in developing countries. However, adequacy of the benefits is a dimension that is still pending. It is a challenge in not only in contributory but also in non-contributory schemes in the social pension schemes. When we talk about adequacy, what we mean here as ILO is to reach a certain replacement rate, to reach a certain percentage of average earnings at country level and at individual level that not only prevents poverty, but also complies with the replacement function, with the softening function that pension systems have. And such a minimum replacement rate, it is foreseen. ILO has international labor norms. We have an international labor norm that refers to social security systems, Convention number 102. And in this convention, there is a minimum threshold of 40%. This below 40%, the probability of poverty is extremely high. So as countries approach 40%, we kind of ring a bell and call attention that the country needs, that the respective countries need to do something to prevent old age poverty and to increase the replacement rates again. Well, as said, there are disparities, there are inequalities between regions, between different areas, geographic areas, and women and men as well show inequalities in terms of pension coverage. Then there is another interesting information in the world. On average, 53.7% of people working aged 15 or older are actually contributing to a pension system in their respective countries. This is still a low indicator, so that means that there are high levels of informality, less in the case of Europe and Central Asia countries, but rather in the cases of Latin America, Caribbean, Africa, many countries in Asia, which bring that average down. Hence, what we recommend to those countries is to launch formalization processes. We also have a set of recommendations regarding how to formalize enterprises, how to search the formalization of jobs, and therefore increase the coverage of the pension systems in their respective countries. Then I think another interesting information for you is that the average expenditure in the world on pensions is of approximately 7% of GDP. This is the latest figure that we found by consolidating information from 160 countries of 185, which are our members. This is, of course, it is higher in those countries which are already mature, and it is lower in countries which have low coverage, low effective coverages. And finally, what we also call attention to is that it is important to see pension reforms. Pension reforms are obviously important to keep the systems sustainable and to keep the systems effective. And sustainability is a really important dimension of the pension reforms. The ILO offers also actuarial support to those countries, member countries that require it. However, we also need to take into consideration principles like universality, adequacy, and others, which are also foreseen in our international standards, in our labor standards, as for example that Convention 102. We have seen that I've been adopting historically a multi-pillar model where comparatively social insurance contributory systems are very important, play a very important role. We also see that 57% of the funds used to finance social protection systems in the world come from social contributions. So it is I think this is a very important part of the pillar. But there is an increasing role for the complementary regimes in some countries. These complementary regimes on mandatory or voluntary basis, managed by the private sector, for example, by insurances, has a growing role, especially in terms of guaranteeing the adequacy of the replacement rates and the adequacy of the benefits. And on the other hand, some countries, most countries in most developing countries have been introducing non-contributory pensions, basic pensions that fill in the gaps of coverage for those who are not able to contribute or to reach the minimum criteria for a contributory pension. And hence, this part, which is called here social protection floor, that can take different forms of social assistance benefits, universal benefits, pension tested benefits, or minimum pension guarantees, adapting this tripartite or this multi-pillar model to the respective context of each country. My final image and my conclusions would be, when a country asks us, because we usually are approached by countries, by governments, sometimes by workers and by employers, which are also members, stakeholders of the ILO. And if they ask us what kind of strategy they need to develop, or we think they need to develop, we answer on the basis of our standards and of the dialogues that we have had within the ILO, especially during the international labor conferences, the guidance that the stakeholders have given ourselves through declarations in the international labor conferences. We answer that a two-dimensional strategy is necessary. On the one hand, we need to comply with international commitments, as for example, the Sustainable Development Goals, to extend social protection and to extend pensions to all those, to all people, and pensions to all those which are in the age of retirement. And on the other hand, the second dimension is the adequacy, is the vertical dimension of the benefits. And in that sense, we also we also recommend that the countries analyze, given the changes in the labor markets, that the countries also analyze ways of reforming the social security systems and include workers in all types of employment, especially the new forms of employment and the self-employed, which are among those with the highest risk of falling through the cracks of the social protection systems. Finally, of course, it's something that you know much better than me and than us here at the ILO. But what we also have been suggesting to those institutions and countries which have fully funded systems, which have reserves, to finance social protection systems, is to apply more and more socially responsible investment criteria, and hence this could be a contribution to a more sustainable and more human-centered recovery from the COVID-19 crisis that we are currently still facing in the world. So I would stop here and thank very much for the invitation to the ILO, and give back the floor to you. Thank you.
Thank you very much, Helmut, for this very insightful presentation with some positive messages, such as, in particular, a reduction in the protection gap, and also messages which clearly resonate with us, such as the two-dimensional strategies you referred to, and a focus on ESG criteria when investing the accumulated funds. I also think it's a perfect introduction to our next speaker, Margot Gillet-Vesentini, who is now going to provide a more European perspective. She's going to present the results of our second edition of the Pan-European Pension Survey. Margot, the floor is yours.
Thank you very much, Nicolas, for the introduction. So before diving in the results of our pension survey, I'm going to give a few words of background. So what is the pension survey? It's a recurring exercise that takes place every 2 years, launched by Insurance Europe with the support of its members, where we touch base with people, asking them their current situation, but also their preferences, expectations from private pension savings. In 2021, we had the second survey then. This year, we had 16 countries on board, 7 new countries compared to 2 years ago, which are in bold in the slide on display. So we are very glad that we were able to expand the scope of our survey. This year, we conducted more than 16,000 interviews, asking 16 questions online in 5 minutes, very short, snappy, straight to the point, targeting people aged between 18 to 70 years old, so people that are in age to plan for retirement, that are not already retired. The scope was limited to private pension savings. We were not asking people about public pensions or any kind of other pension investments outside of financial markets, such as real estate, for example. And now moving on to the result, I think the first aspect that we wanted to get a better understanding is how people are saving, or shall we say how people are not saving, maybe, because the results in 2001 showed that 38% of respondents are currently not saving for their retirement. That's slightly lower than 2 years ago, but that's because the new countries that joined the initiative, many of them represent well-developed, mature pension markets. But if you compare the 9 countries that took part in both iterations of the survey, that's actually very stable. So the pension savings gap remains a big issue. Those who were saving, there was a majority saving via employment, so via occupational pension plans. There was also a significant share of respondents who were saving on an individual retail basis via personal pension plans. And there were also people reporting saving via products, national products available at national level that are not maybe meeting the criteria of the European taxonomy when it comes to pension. When analyzing the pension savings gap at EU level, I think it's very important to have a look to country results, because as you can see in the slide, there are quite some significant differences. The lowest savings gap being in Sweden, for example, with 10%, and the highest one in Finland with 60%. However, when looking at the figure at country level, I think it's very important to keep in mind the bigger picture and the fact that this is only about private pension savings, and there are many other factors that you need to consider when you speak about future retirement adequacy. And for example, taking the 2 countries that scored with the highest savings gap, Spain and Finland, I think the figures mean very, very different thing in practice. Another interesting thing is to break down the results by group of respondents, as it allows us to identify some group of respondents that are in a weaker situation when it comes to preparing for retirement. That's the case for women, also the case for younger people aged between 18 and 35 years old. Employment also has an impact, or shall I say unemployment. You can see in the slide that 70% of unemployed people are currently not saving for their retirement. And people who are in what we call at EU level, non-standard forms of working, so self-employed or part-time employees, they tend to save less than more traditional form of workers, so public sector or full-time employees. Education also has an impact. The higher the education is, the lower is the savings gap. Last but not least, the marital statute also has an impact, with married people always better off when it comes to preparing for retirement. We also wanted to understand why people are not saving. So we asked those not saving whether they would be interested in starting to save for their retirement. The good news is that 55% said yes. However, 33% said no. Among the barriers reported to save for retirement, affordability was the first one, with 30% of respondents not saving, followed by lack of interest and a lack of information third. A new addition to this pension survey is having a look at the impact of COVID-19 on pension savings. Maybe some of you attended the events that we had. It was a physical event when there used to be physical events 2 years ago on the pension survey, the 2019 pension survey. It was just before all the restrictions or the lockdown measures were introduced all over Europe. And so we thought that the timing was good to have a first understanding of what COVID-19 means on pension savings, although it will take a long time before the full effect materialize. 73% of respondents say they were not impacted, but a fifth of respondents were impacted. And even more, let's say worryingly, 17% of respondents say they experienced a negative impact, which means that they either reduce their contributions, delay the decision to save for retirement, or that they surrendered or withdrew funds from their savings plans. Looking at the negative impact of COVID-19, it's important to break down the results by countries. As you can see again from the slides, there are countries where the negative impact was very limited. That's the case for Luxembourg, Denmark, and Finland. But others were very much impacted, such as Portugal. A third of Portuguese respondents reported a negative impact. That reflects, I think, local legislation. So how much regulation allows people to access their retirement savings before retirement, either be via specific measures introduced in the context of the pandemic, or whether losing your job as a result of the COVID-19 crisis was qualifying as a hardship situation. But it also reflects public intervention and how much governments provided financial supports helping people to deal with the crisis. It's also interesting to break down the results, and what we can see is that there is a clear link between employment and negative impact of COVID, with self-employed, unemployed, and part-time employees more impacted than other forms of work. It's also interesting to look at age, because we can clearly see that younger people aged between 20 and 40 years old were more impacted than others. Another thing that we try to get a better understanding with the pension survey is the appetite of people. So which type of features are they looking when they save for retirement? The first thing that we wanted to ask them is whether they would prefer security or performance. So security being the certainty to get back the money invested with possibly an additional sum, and performance being the fact to benefit possibly from higher returns, but also with the risk of losing money. As you can see in the slide, there is an overwhelming support for security, 83% of respondents at EU level, and this preference for security is even more acute for some group of respondents, women and part-time employees, for example. We also ask people to select their top 3 priorities when it comes to saving for retirement. Again, security comes first for 49% of respondents, followed by robustness of the provider, which I think very much echoes this idea of security, safety, and followed by payment flexibility. So that's the possibility to stop, resume, increase, decrease your contributions to match your personal circumstances. On the other hand, other priorities such as the performance of investments, the sustainability of investments, and the portability of investments were deemed less important. Portability being the fact to move on a cross-border basis, changing countries. We also asked people whether they would be interested to top up the scope of the protections when they save for retirement, meaning to purchase additional biometric coverage, being the coverage of, for example, of mortality risk, longevity risk, or morbidity risk. And as you can see, there is a significant share of respondents that were interested to pay for these services. And now we move on to the decumulation. So yeah, it's pension. It's not only about accumulation, it's also about decumulation. We asked people whether they would prefer receiving their pension money that they have accumulated over the years via a regular stream of income, either be a lifelong or a fixed-term annuity, or all at once a lump sum, whether they would prefer to program regular withdrawals on a contractual basis with their providers, or whether they would prefer a hybrid solution combining different solutions. As you can see, annuities came first, 43% of respondents, followed by the hybrid solution, which shows how much people they are pretty much aware of the trade-off between longevity and liquidity aspects. But things get a bit more complicated when we put monetary figures. We asked people whether they would prefer to receive a 50K lump sum or whether 2,500 euros yearly annuity. And there you see the preference goes for lump sum. First of all, little disclaimer, the two questions, they are not symmetrical, so they are hard to compare, but we think that the observed difference, they are a perfect illustration of behavioral bias, in fact, impacting pension savings and how people might be attracted to larger sums, satisfying shorter-term needs. But also it shows that people might have unrealistic expectations from annuities, and it also shows the need to consider behavioral economics when you give pension information, because you see with or without monetary projections, preferences of people are completely different. They are nudged in a different situation. But all in all, it's really stresses the need for further financial education to raise awareness about long-term planning and longevity issues. Last aspect of my presentation is about pension information. We asked people what are the top 5 pieces of information that they think are most relevant. As you can see, information on costs came first, followed by information on guarantees. And then we distinguished, 2 stages of information, the one before purchasing a product and the one once the product is purchased, so during the contract. And at pre-contractual stage, information about insurance coverage came third, followed by, and then information on performance came third during the contract. I think what is very interesting to see with this slide is not only which type of information people are interested, but is to see how people strongly feel for some information and how some other information maybe are less important. And I think that gives a lot of support in the current discussion that we are having about streamlining the quantity of information someone has to receive. Last but not least, we ask about the format of information, asking people whether they would prefer to receive their information in a digital format or in a paper format. Very strong support for digital information, 72% at EU level, which is an increase compared to 2 years ago. Actually, if we compare the results for the 9 countries that participated in both surveys, we see it's a 2% increase, a small one, but it's only 2 years. We will have to see whether this is an emerging trend that will be confirmed by next pension surveys. And this appetite for digital information was even higher for some categories of respondents, precisely for men, younger people, and people with higher level of education. So this is it for me today. Before handing over the floor to Nicolas and the panelists, I'm going to have a quick recap of 6 takeaways that you need to remember. A summary of the presentation is that first, 1/3 of respondents are not saving for retirement, thus confirming the concerns about future retirement adequacy. Second, COVID-19 had an impact on almost 1/5 of respondents, a negative impact, therefore calling for solutions in quite an urgent way. Security is the top priority for most respondents. People prefer digital information. Fifth, there are differences between countries. 6, personal circumstances have an impact, which confirms the fact that a one-size-fits-all is often not adequate in the field of pension. This is it for me today. Happy to take any question later and looking forward to hearing the reaction of the panelists. Thank you very much.
Thank you very much, Margot. Very clear presentation, which gives very good material for our panel. And I would like now to invite our panelists to our virtual stage. We have with us today 3 distinguished pension experts. We have Elsa Favre-Baron, policy analyst at the OECD's Private Pension Unit, where she analyzes private and funded pension systems with a particular focus on investment strategies and gender differences. Elsa, it's great to have you again with us today, because you were already with us at the workshop that Margot referred to 2 years ago. We also have Ilka Houben, Head of Pensions Policy at the GDV, the German member of Insurance Europe, the German Insurance Association. And last but certainly not least, we have Justin Wray, Head of the Policy Department and Head of the Insurance Policy Unit at the European Insurance and Occupational Pensions Authority, better known to most of us as EIOPA. Many thanks for accepting our invitation. And before we start, a final remark to our audience to mention that you should feel free to ask questions, and we will do our best to dedicate a bit of time at the end of the session to respond to some of those questions. But now let's start the panel, and I would like to start with a very simple question. In one sentence, what struck you most about the survey results? And I would suggest to maybe start with you, Elsa.
Sure, thank you, Nicolas. So what I find really interesting is to see that it's the same as 2 years ago, but I still find it really interesting to see that there's such a strong discrepancy about the preferences of people for lump sum or annuities during the payout phase, depending on how you give them the information. So people tend to prefer the concept of a regular stream of income. That's true until they see monetary projections. So when faced with what seems like large lump sum numbers compared to annuity payments, people choose the lump sum. So this really illustrates the importance of communication and framing when informing people about pensions, investments, and risks. And I find that very, very interesting.
Thank you. Certainly also a topic which we are discussing internally quite a lot, because there are many ways of interpreting the result. Thanks very much. Ilka, would you like to be next?
I would fully agree, Elsa. That is an issue we are dealing with. But my sentence would be, I was struck by the fact that COVID-19 didn't have a much bigger impact on savings in Europe. And I think that is a positive sign of trust in the industry, of trust in the providers, that so many were able to maintain their savings. And it also probably has to do with the way governments handled the crisis. So that was one of the other things that struck me most.
Thank you. Justin?
Thanks, Nicola. Good afternoon, everyone. Good report, thank you, and thank you for the invitation. Probably the thing that struck me most was that costs were the most important factor cited by respondents. I'm not sure if I would draw the conclusion, therefore, that there is so much trust. People sort of clearly concerned that they might be paying too much, or they're simply not knowing what they pay. And so I thought that was the finding that struck me most from the report. Thank you.
Thank you very much. So 3 different areas, which I suggest that we cover as we go through the different topics covered in the survey. And if you agree, I'd like to start with the overarching issue of the savings gap. Let me just remind you of some of the figures that we heard from Margot. 38% of respondents are not saving for retirement. Of those, 55% are interested and 33% are not. Affordability is the main barrier, followed by lack of interest, 25%, and lack of information, 14%. So the question is, what do you make of these responses? How do you see the savings gap? And also, importantly, what do you think is needed to stimulate more retirement saving? May I start with you, Justin? What would be your take on the savings gap?
No, thanks, Nicola. I mean, indeed, it was an interesting finding, and it's probably true to say that we spend a lot of time, possibly too much time, focusing on those who are saving into a pension, and maybe not enough time on those who are not. And I mean, it's more public policy than sort of prudential supervision, which is what I do. But this is certainly a problem for society as a whole. I think it is. I mean, I think there's a number of factors. Part of it, again, comes back to trust. people may prefer to save in property rather than, say, in a pension. In one respect, as long as they are saving, maybe it's not so important. I think also there is issues of awareness. And maybe this is top of my mind today because the EIOPA just issued some advice on pension tracking systems. But it can be difficult to understand what is the level of your pension savings, what are your pension entitlements, and I think it's important. One contribution to reducing the savings gap could be to make it easier for people to find out what their level of entitlement is. Thank you.
Thank you very much. Very important points, and also many thanks to EIOPA for publishing your report during the retirement week. Much appreciated, although I'm not sure it's on purpose. Thank you. Elsa, would you like to be next on the same question?
I would actually tend to agree. I think there really is a lack of financial literacy in many countries, including in Europe, and this means that people are often not aware of the need to save for retirement or of the impact of their saving pattern throughout their work life. And that has the implications on their financial well-being in retirement. So too often people only start thinking of retirement once they approach retirement age, whereas saving for retirement really is a lifelong process. So there are things that can be done, such as national financial education campaigns to increase the awareness and understanding of people. But it is crucial that, as Justin said, that communication is done in a way that people understand. And so to avoid any technical language, jargon, etc. Because one of the key issues is that people think of pensions as too complicated for them. And they actually quite often solve the problem by avoiding it completely until they're forced to think about it. But that only happens quite late in life. So I think really the education and stressing on communication is really key to solve that pension gap.
Thank you. That's something we would certainly very much agree. The more soft aspects of the whole pension debate, if we are to reduce the pension gap. Thanks very much, Ilka.
Again, fully agree. I think we need to start early with financial literature. It has to start in schools, and it has to be communicated in a way that is understood. What I would really say is, and I think this has been mentioned in half a sentence in the first contribution, really is we need a social and a political consensus that we need more second and third pillar savings in order to have a good life at old age. And it really needs to be clear that the statutory pension is the first strong pillar, but that it needs to be, it needs to have some additional savings in order to maintain a good life. I think that is the baseline. And what we also need, apart from communication and awareness is key, that's for sure. But I do think that we need a certain support, governmental support of additional savings, especially, and I think this is an issue we will be talking about later, especially for people with lower income, for women, for families. There need to be incentives also to save. And I think that is something we all need to work on. And there's always room for improvement in the already existing systems.
Thank you. I think that's also something we have been working on at Insurance Europe. The question of providing the right incentives for people to be incentivized to save and keep money for their old age. Thanks very much for all those views. I would like to turn now to another aspect that comes out very clearly from the survey, which is the fact that personal circumstances have a reasonably strong influence on people's approaches to their pension. We have heard from Margot on differences depending on gender, depending on professional situation and age, of course. But clearly, one of the striking differences is gender. We heard that women tend to save less, but also that they have a stronger preference for safety than men. My question is, how do you see the gender and savings and protection gap currently, and how do you see this evolving, and what would be the recommendations you would make to deal with those issues? And I know that, Elsa, you have been involved in work that the OECD has conducted on the topic, so I would be interested in your views, and we'll invite you to start.
Sure, thank you. Yes, so that's true. So we at the OECD have done a lot of research on this topic, and it's really important to note that today the gender pension gap comes mostly from inequalities in the labour market, so the capability to save. But it's also reinforced at every stage of preparing financially for retirement. So women have less access to retirement savings arrangements. When they do have access, they less often participate in retirement savings arrangements. They contribute lower amounts, less frequently. They earn lower investment returns. They have lower benefit entitlements of their own, and they have lower retirement income, and they need it to last longer. So the good news is that because there are so many factors to the gender gap, there are also many ways to ensure that women are not put at a further disadvantage when saving for retirement. And so policymakers can act upon all of these stages. One way, for instance, to start is to improve women's access to pension plans by increasing the availability of occupational plans in industries employing many women, or by relaxing eligibility conditions, for example, to include part-time workers who are disproportionately women. There are also ways to increase women's participation, the level of frequency of their contributions, for instance, through targeted communication campaigns to educate women on the importance of saving for retirement and of saving regularly, or by providing subsidies to ensure that contributions are maintained during maternity leave. But as you also mentioned, the preference of women for security, so policymakers can also act to kind of improve investment returns for women by implementing non-conservative default investment strategies, and that helps counter the lower risk tolerance of women on average. So there are many ways in which policymakers can act, and I would encourage you to all attendees to have a look at the report that we have published earlier this year on improving retirement income outcomes for women, where we discuss all of these different types of policy options to ensure that the design and the functioning of retirement arrangements do not contribute to the pension gap further, and actually help, if possible, to reduce it.
Thank you very much. If I may, I would echo you here, your invitation to look at those reports, because we did, and we thought there was a lot of very interesting food for thought, and on an issue which is not easy, but you managed to, or we felt you had a very interesting take on it. So thanks very much. I would invite Justin to share his view on the same topic.
Thanks, Nicola. I think that one of the welcome developments in the last few years has been the greater prominence of this issue. And I mean, part of the sustainability debate has sort of started looking at climate risk first, but actually, of course, it's ESG and social issues are becoming increasingly important. And I think from a regulatory perspective, they're kind of moving from being nice to have to being part of prudential regulation. So I think that in the future, a pension, say, that is adequate overall, adequately give a scheme that gives adequate pensions overall, but does not, say, give adequate pensions to its female members, there may be issues there. There's going to be a greater focus on this, and I think this is a good thing. Likewise, I think some intergenerational issues are very important in pensions, and these again will start to have greater prominence. I think some of the solutions, I mean, I certainly agree with what Elsa said about making pensions available, occupational pensions available in those sectors where female employees predominate. Likewise, in terms of the kind of design of pensions, that you don't get the kind of best payout if you have an unbroken 40-year career, that actually doesn't reflect the reality of lots of people's lives, and that there are steps that can be taken in that sort of area to help reduce this inequality. Thank you.
Thanks very much, Justin. And I would also be interested in Ilka's perspective and on the same topic, but also possibly on the question relating to other categories of workers, which are found to save in proportion less, like self-employed people. Any view on that?
Mm-hmm. Yes, and indeed, what we see with concerning the gender pension gap is a mirror of the labor market 30 years ago. And this is also why the gender pension gap, unfortunately, is closing much with less speed than the development on the labor market. So I think we do have some indicators that women participation in the labor force has raised, that we do see more women taking up the career, but the results will be seen many, many years later. We have talked about occupational pension, and indeed, if you are not part of the labor force, then you do not have access to occupational pensions. And I think this is why private pensions do play such an important role, especially when it comes to the additional protection of women. We need to be sure that flexible biographies, like you mentioned it, Justin, also need flexible pension plans in order to keep up with it. And I just discovered, and I will talk about self-employed people just right away, Nicolas, but we have a recent survey amongst women, and the reason why they are not saving for retirement, apart from the statutory pension, I think were quite enlightening. 68% said that they don't have enough money to save for old age. 38% said not enough information. 33% said we don't know whom to turn to and to ask where to get information from. 1/3 said we couldn't afford other things, so we are not saving for retirement. Current consumption is more important. And at least we had 16% that said, I just don't care. So I think it could be an illusion where to tackle the issues in order to close the pension gap. When it comes to self-employed people, especially a lot of women are amongst the self-employed, especially we call them the solo self-employed, like self-employed with no bigger company, with no employees in their company. In Germany, they have the rate or the risk to end up in social welfare is as twice as high as to the average work population, which shows that there might be special needs or special creations for self-employed. In Germany, as you know, we are probably having a new government next week. So what the coalition partners agreed upon is an obligation for self-employed, for new self-employed, taking up a startup, taking up new initiative for becoming self-employed to invest in old age provisions. That doesn't necessarily have to be in the statutory pension. There is an opt-out possibility foreseen in order to make use of private pensions as well, as long as it fulfills certain criteria. And this is a way that has been strongly debated also in the last legislation period. And we will see what the outcome will be, but it seems that there is also a need not just for incentives, but also for a little bit more of nudging or more mandatory systems. And I think it really needs to be a balance for the self-employed, because we all know if you're starting a new business, the burden can't be that high, but you already have to take old age into your planning.
Thank you very much. So as often with pensions, there is no silver bullet. The issues are multifaceted and the solutions are as well, and you need to tackle them from a number of different perspectives. Very, very interesting. Thank you. I would like now to turn to one of the other aspects of the survey that Marco referred to in the presentation of the results, which is COVID-19. We have already, Ilka, you already touched on that, the fact that it affected close to 1/5 of respondents in a negative way, which can be interpreted as as a good sign or as a bad sign, depending on the interpretation you want to make. But I would be interested in your views with hindsight. Is there something governments, policymakers, supervisors could have done to better protect pension savings or protect them even more? And is there any lesson we can draw from this experience, which is obviously still ongoing, in terms of the future and what to do vis-a-vis a potential future pandemic? Any view on that? And not sure who would like to start. Elsa, would you like to start?
Sure, happy to. So I think what the COVID crisis shows us is that for pension savings to remain sustainable and become more resilient, it's key really to balance short-term relief and potential negative long-term consequences. We see that many OECD countries have allowed members of retirement savings schemes to access their pension savings early to some extent. So this may be appropriate in some cases, but it's really important to ensure that this remains a measure of last resort, and that is based on personal circumstances rather than allowing all citizens to withdraw part of their retirement savings early. Because these early withdrawals really have potential long-term implications that can be significant if people do not replenish their pension pots. So once again, coming back to financial education and communication, these are also key because we need to, in such a situation, to ensure that people remember that saving for retirement is all about the long term, and that, for instance, concretely withdrawing money in times of crisis may be appealing, but it actually increases the risk of materializing financial losses that could disappear if and when financial markets recover. So it really is important that policymakers keep the objective of retirement savings arrangements in mind, and that once again ensure that people understand the consequences of their actions with regards to pension saving.
Thank you. Justin, would you agree with that?
Yes, I would. Yes, I would. I mean, having said that, I mean, pensions are the kind of longest end of the financial sector. I mean, if any kind of part of the financial sector can survive COVID, I would say that it's pensions. And indeed, for the most part, I mean, from EIOPA's perspective, looking, say, at the impact of COVID on insurers' balance sheets, it has probably been less than you might have expected. So I think that, it's of course it was damaging, and of course, there are individuals whose circumstances have been greatly changed, but kind of looked at from a more macro perspective, the damage isn't too severe. I think that there's a couple of lessons, however, that's important to take. One is that when regulators go on boring things about 1 in 200 year events and capital requirements and stuff, well, this stuff does happen. I mean, you can safely describe something like COVID as a 1 in 200 year event. It helps to have, it helps to be prepared. It helps to have a financial cushion to prepare for such events. So I think that is certainly one lesson. And I think there is a lesson for all of us in terms of how we prepare for future such events, whether it's pandemic or other kind of catastrophic type events, that the kind of institutional structure by which society as a whole deals with these things, I think we need to think it through. That, I mean, apart from the kind of disease itself, the kind of pain of COVID fell mostly on individuals and governments. And as I said, the financial sector was relatively unaffected. I think in future we should think about how the pain is divided up in an optimal way, rather than having to sort of make it up as we went along, which was the situation this time. Thank you.
Thank you very much. So that is indeed leading us a bit away from purely pensions, but it's true that the pandemic in itself is a much broader topic, which has to be looked at, and solutions or possible avenues have to be investigated. Ilka, what would be your conclusions or recommendations?
I would like to link to what Elsa said. I think it's about the resilience of the systems, and I think we need to make sure that our systems are as robust as possible, actually, and that we need to balance the three pillar, independently of a pandemic or catastrophe that might happen. Plus, I would like to add. Elsa talked about early access to pensions in order to overcome a financially difficult situation. I would also say, and maybe I think it's not just a German issue, but a lot of social welfare programs are means tested. That means there should be an amount of exemption that is safeguarded, even if you get unemployed, even if you need support. Then I think at least part of your personal private pensions should be safe. And in order to it's also an incentive to save for the future if you know that you don't have to access it if you get in a financially difficult situation. We did that a couple of years ago. We need to figure out if these amounts that are exempted are high enough. Are they in a good proportion? That is something that should work. And I think that is also an issue we are debating. How can we balance the yield in a way that we do profit from if interest rates are low, how can we profit from capital markets even when times are bad? And I think that is also an issue for many member states. It is an issue in Germany when it comes to private and occupational pensions, to see if we can get a little bit more flexibility in the guarantees. That is an issue that might be a special one, but I think overall it really is, you don't have to be forced to early access your pensions in a crisis.
Very, very interesting perspective, and I think also it's something we commented on, the fact, I mean, the importance of avoiding somehow artificial volatility or excess volatility, forcing as well potentially insurance companies to take certain decisions, and that's obviously linked to the regulatory framework, making sure that if the commitments are have a long-term perspective, that the way the balance sheet is being structured and affected is also reflecting that long-term perspective. Is there anyone who would like to comment on this topic? Or not? We can move to another one I would like to touch on, which is at the core, I would say, of the survey, which is the question of security, safety. For us, it's one of the important highlights is a strong preference expressed for safety. Indeed, 83% of our respondents expressed a preference for investment safety over performance, and the figure was also high 2 years ago, as Margot mentioned. So it's, if anything, a confirmation of this preference for safety. It's I would like to ask Ilka, as a representative of the insurance sector, how can insurers meet this desire for security? Are they in a position to do that currently with attractive solutions? Does regulation have a role to play in this respect? Is there any change that is required? What's your take on this strong preference for safety and security?
But the classical answer, Nicolas, would be we are offering guarantees, and that is something that is the USP of the life insurance sector. And I think that is what is still demanded, and this is what our clients tell us too. So the survey is really reflecting the common ground, the spirit that we have. I think it has to do with a very basic human need, safety and security. But as I said, in a low interest rate scenario, that is not just a temporary phase. I think we need to talk about how to balance safety and performance in the future, how to balance that. But I think the need for safety is widely spread, which means that we should be careful with balancing and really look what we are offering, and to have different focus groups, different clients, to be able to give tailor-made offers to the people. I think that's one issue. The other issue I would like to stress is the thing that struck Elsa concerning the whole survey is we need security also has to do with lifelong payments, especially if you live longer than you think. So that longevity might be an issue that we might be talking about later, maybe. And that is the other side, not just the accumulation phase, but the payout phase, and to really guarantee a lifelong income. This is what most pay-as-you-go systems offer. This is what we strongly believe additional savings should provide at old age as well. And that is also something where life insurers do play an important role, and we are planning to still play an important role in that sector.
Thanks very much. And I would say there is even another aspect which you could consider here, which is protection against other types of life-related risks. And we have also seen in the preferences of the respondents that this scores quite highly as well. The possibility of being protected against diseases or death, and that's also obviously something that insurers are keen to offer. Thanks very much. Elsa or Justin, any reaction to that?
If I may, somewhat to my surprise, I find I agree with everything that Ilka said. And I mean, I come on here as a supervisor, and I don't always agree with what German insurers say about long-term guarantees and all of that. But I have to say, the points that she made, I agree with them. I agree people want security. I agree that one of the unique selling points of insurers is their ability to offer guarantees. I mean, defined benefit EIOPs as well, but there are relatively few institutions that can do this, and insurers are certainly one of those. That we live in a long-term low interest rate environment is probably the safest assumption, and that therefore, yes, you do have to balance safety and performance. That the cost of safety becomes ever greater as you move into this a low for long environment, and that you need to have a real consideration of this. And also the role of annuities and their appropriateness in many circumstances. I would also agree. I mean, you asked, Nicola, can regulation play a role in achieving this objective? I think that's probably fair enough. That's a question for me. I mean, I think the best role for regulation is a recognition of the risks and their costs. And I mean, I come from the UK, and the UK had a very fine defined benefit system, which got ruined by failure to recognize risks. And there's a long discussion about whose fault it was. But if some higher costs had been imposed at the time when they were affordable, you would not have had the kind of shutting down of the defined benefit sector when the kind of costs crystallized. So I think that the role of regulation is to recognize the low interest rate, low yield environment and the risks of that, and the need to kind of provide adequately for that. And as Ilka said, to think about what is in such a world, what is the right balance between safety and performance. Thank you.
Clear, thank you. With, of course, the whole discussion around how to measure those risks, and there may be disagreement on what the real risks are, especially from the point of view of long-term players. But this would bring us to a discussion on
don't spoil it, Nicholas. We were agreeing for a moment.
which we would not necessarily want to have today. But thanks very much, very clear. And I would like to also hear from Elsa.
Sure. Yes. Well, actually, I also agree with both Ilka and Justin, and I think it's your survey shows it really well. There is a trade-off between safety and performance. Guarantees are good, people like them, but it's really important that people understand that they cost money. And I think this again shows the importance of making sure that people understand the different risk and return profile of different investment strategies, and also have an opportunity to have some sort of an objective assessment of their own risk preferences, so that they can choose an investment strategy that's in line with their personal circumstances and needs. Because a lot of people like the concept, but once they understand, they might not be willing to, or they might be willing to spend that money on guarantees. But I think it really is important so that people understand this trade-off. And I don't think it's always necessarily the case. So that's something where regulation can also play a role in the sense that making sure that there's the way risks are communicated to the public are clear, and to help them navigate this complicated world.
Very clear. Thanks very much. If there is no further comment on this topic or no reaction on this topic of safety, another key aspect of the survey I would like to make sure we touch on is the question of how we communicate with beneficiaries, with pensioners, whether we do that digitally or on paper, as I think this is a key question for beneficiaries, for providers, and for supervisors alike. And here again, the survey is pretty clear that there is a very strong preference, at least on average across Europe, for receiving information digitally. The average is 72% of respondents which express such a preference. And again, as Margot mentioned, this is a slight increase compared to 2 years ago of around 2%, if I'm not mistaken. So we will need to see whether this trend is confirmed, but at least in any case, the result is quite high. So the question is whether we are currently managing to meet those expectations of receiving information digitally, and obviously that's something which is very close to the work of EIOPA. So if I may, I would like to start with you, Justin. How do we currently meet individuals' desire for digital information, and what is EIOPA's take on that and actions currently on the topic?
Yeah, no, thanks, Nicolas. This is the second event of European Retirement Week that I have taken part in. The first one was an event talking about EIOPA's advice on pensions dashboard and pensions tracking service. And I mentioned this because Anders Lundström, who is the CEO of one of the Swedish pension tracking service, had a very interesting slide. And what this slide showed, I don't think I'll try and share it, but what it showed is that a large proportion of potential users of a Swedish pension tracking system were fine with digital, but a small but material portion didn't use the internet for whatever reason. So yeah, there is a difficulty there. That yes, most people will prefer digital, but what do you do with those who don't? And you know, this is not an easy question to answer, but I mean, at least in terms of sort of giving everyone access to their pensions, you have to think about those who don't want to use digital means. Then, of course, in terms of those that do, you have to think about how to present the information in the best way in a digital world. I mean, two of the findings that we had in our tracking system advice is the importance of layering, that in a typical pension tracking system, something like 75% of people don't go beyond the landing page. So whatever it is you want to say, you need to say it on the first page, because most people won't go beyond that. And that actually in a world in which people access stuff through their smartphones, information on the center of the screen is much more likely to be focused on than stuff at the edge. So yeah, I think that there are certain that when you present stuff digitally, clearly it has to be done in a different way than in paper. You have to think, particularly in the world of pensions, how you cater for those who are not using the internet. But the finding that in your survey makes perfect sense to me. Most people prefer it these days. Thank you.
Thanks very much. I think we would agree with what you mentioned, that it's important to make sure that for those who want information digitally, that can be done in an easy and user-friendly way. But we should also obviously not lose sight of those who have a preference for other ways of communication. And I think the point you made on layering when it comes to the digital provision of information is certainly an important one. So very interesting. Thank you. And I would suggest to turn to Ilka to hear your take on that. And also Germany was mentioned as one of the countries where the preference for digital information is a bit below average. I was wondering whether that surprises you or whether you have no.
It could have been an answer to your first question, what struck you most, but it didn't struck me. But it was it showed that maybe we are a little bit, again, safety, very classical, very traditional in these ways. But I think it's also an intergenerational issue. I think for the generations to come, dealing with digital information will be much more natural, maybe than for us in the middle, or for the ones that are a little bit ahead of us. So I hope that this is changing, and I'm really looking forward to the insights of your current report, Justin. I didn't have the time to go through it because I was preparing for this panel, but this will be the next thing on my desk, actually, because, and this is why we are so interested in this issue, Germany, 20 years after the Swedish or the Danish pension tracking systems, Germany is taking up effort to set up a German pension tracking system, also looking, of course, at the projects at the European level that are already going on. And the landing page, the front end, the overall overview is something we are dealing with exactly next week, because this will be one of the most important things. Another thing will be an intense consumer testing in order to make sure not to set up something that is in the appetite of the administration, or of the ones, as you said, that know so much about pensions. It has to be clear, it has to be understandable, and for us it also has to be not just facts and figures, but also in a graphic order, to have all the things at first sight, and then to get more appetite to dig deeper. So leave the landing page and try to find out what's behind that. As I already mentioned, the clear language, strip off the technical things, but be correct at the same time. So I think this is a huge issue we are dealing with at the moment. This is also one of the I would say, like, highlight digital projects of the German government these days. We are participating in it, hoping to bring it to good results, and to bring in the expertise and the knowledge of clients that we have. So, and then even at a higher European level, this is a big task. Really, it is, Justin. And I hope we can contribute. As I said, we can contribute to good results. We'll see what the future brings. Really looking forward to your recommendations. I think they will play a role in our further debates too.
Elsa, any comment from your side?
Yeah, sure. I think, yeah, as Justin and Nika have said, like, clearly more is being done in this area by pension providers across countries, and people's appetite for digital information has increased with the pandemic even more, as more people have become familiar with digital financial services. And I think your survey shows that, although it's still modest increase, but we see an increase in the demand for digital information. And there are really several examples of good practices from countries such as Sweden and Denmark, which have been cited before, with pension dashboards that allow people to see all of their pension savings at once. So coming from both public and private sources. And this is really very important. And and to be able to check simulations and retirement income projections, these digital tools can be extremely helpful in engaging people with their retirement savings, encouraging them to take action, such as, for instance, by increasing their contributions, or considering different investment strategies. I know that the International Organization of Pension Supervisors and the OECD have done some work on projections. Really the key here is, again, simplicity, so that people understand, but also obviously to ensure that any income projection is based on sound and harmonized assumptions between different providers, so that people can have like an overall picture of their situation and make decisions that are not based on unrealistic or inconsistent assumptions when they see their potential income from different sources. And again, as Justin said, I would really like to stress that although we see more demand for digital information, it's very important to ensure that those people who need help with digital tools or cannot access them still receive all the information that they need from their pension providers.
Thank you very much. Very clear. I also think this is typically an area where it's really important to look at the experience, the positive experience, especially of markets where the discussion is more advanced. And I was unfortunately not attending the webinar you referred to, Justin, but I also remember presentations on the Swedish orange envelope. And what struck me back then was this will to year after year increase the quality of information in function of an analysis of people's preferences and understanding. And I also took from that discussion that one of the conclusions was less is more. So that year after year, the amount of information being provided to Swedish pensioners was going down, and that was in fact increasing the understanding of the information that was being provided. Well, thanks very much. There are still a couple of topics I would like to cover, but I also see that we are receiving questions from the audience. So I would like to take one now, if you agree. So the question reads, isn't the strong appetite for safety contradicting the shift to DC pension savings? Can we say that pension megatrend is driven by regulation and ECB monetary policies instead of market demand? So we touched on this to some extent with the question on how to meet people's preference for guarantee and can we do it? And we see that on the other hand, there is a trend towards DC. So would you like to elaborate further on this particular question, any one of you?
I'm happy to start on this one. I think, I mean, I don't know if if it's a contradiction between the shift to DC pension savings, but it's important to see that there are different ways that DC pension arrangements can be organized, and there can be some risk sharing in DC schemes. So obviously, more of the risks are shifted towards the individual rather than in defined benefit schemes. But there are ways where individuals can pool their risks even in DC, and I think in the OECD we have also worked on this. One of my colleagues has recently published work on this particular topic, and we see more demand from countries to look at these types of arrangements where not all of the risk during the accumulation or decumulation phase is individualized, but rather to some sort of pooling of some of the risks, such as longevity, for instance. So I think I don't see a clear contradiction. I see the DC market is evolving with the demands from the public.
Yeah, if I may say something, Nicola, I mean, it would be nice to blame the ECB or regulation, but I mean, this trend is driven by reality. That's what's driving it. I mean, at best, the ECB and the regulation is just trying to catch up with the reality. I mean, the reality is the low interest rate world. And this has had a huge impact on the cost of financing future liabilities. And it has also had impacts on asset values as well. And in that, faced with that reality, the cost of providing security has increased by so much that in those countries where there are sponsoring employers, they have sought to reduce their exposure there. Likewise, insurers which offer guarantees are increasingly turning to index-linked products because of the costs of this. As I said, it's got nothing, in my view, or very little to do with regulation. It's got to do with the reality of the world that we face. I think what Elsa says about within the move to DC, the extent to which you can share the risks so that it is not, it's not binary solutions, either complete security or you're completely on your own. I think these are very interesting sorts of solutions. The so-called collective DC, in which cohorts kind of share risk. I think that this is these are very interesting developments. Thank you.
Thanks very much. Ilka, would you agree with what you heard?
Oh, it's up to me to agree in return, Justin, to a certain extent. I mean, we've talked about balance and balancing security and performance issue. And as a matter of fact, of course, we can try to better the conditions around us. But as a matter of fact, we have to face them and to deal with the situation we are in and to make the best out of it. At the moment, we don't see pure DC schemes for Germany as the solution. You may have heard that in occupational pensions we have at least a baseline, or we have regulation for so-called social partner models. That means we can offer DC schemes based on collective agreements. So I think like 4 or 5 models are about to start, but so far haven't. They are planned, and they're nearly close to starting. And I think we can also learn from the experience within these models. But there's one thing that differs from pure DC schemes in general. It's because the social partners are responsible for the outcomes, for the performance. So what legislation in Germany did is that they didn't free float it. So they said there is another form of regulation in order to make sure that employees get the amount of safety and security they deserve. So I think there is a lot starting, maybe some fields to experiment with. I do not see that we will be getting to pure DC schemes right away in Germany. And as I stated, I don't think that this would be that would meet the needs of the clients. But in this scenario, in this world we're living now, we have to find out which other ways we can go. And this is something we have to. It's a discovery journey, I would say, at the moment.
Thank you very much. We are slowly approaching the end of the panel, but there are still a couple of things I'd like to touch on. One in particular, I would like to ask you to comment on. It's the question of national differences, because we are here speaking at the European Retirement Week, but the survey confirmed that there are many pension-related questions which have a very strong national component. So the question is, how important is it to have a European or a global perspective on retirement savings and the protection gap when we see that there are so many national differences? And is there a need for a European or for global initiatives? What's the role of the more than higher than national level in all these questions? May I suggest to start with you, Justin, as the representative of the European Supervisory Authority?
Yeah, thanks, Nicola. And I mean, of course, I am paid to say that a European perspective is required. I mean, that is what EIOPA does. We are the European Supervisory Authority. So, of course, the answer to your question, is there a need for European initiatives? Yes, I think so. I think that there are, I mean, being more serious, I mean, I think there are a number of good reasons for this. One is that there can be an internal market in pensions as much as there are in other financial products. I mean, or maybe put it another way, that if the internal market is thought to be a force for good in most of the financial sector, are pensions so different that this is impossible, or that you simply have to recognize the distinct characteristics of occupational pensions and other sorts of arrangements? Secondly, I think that a European perspective can be a force for improvement. I mean, every country is certainly different, but most countries have opportunities for improvement, and they can learn from what is happening in different countries. And I mean, here I need also to pay tribute to the work of the OECD and the kind of information that it has on pensions among its members. I think related to that, comparability is very important. And we've talked about the advice on pension tracking systems. The other bit of advice that EIOPA gave today was on pensions dashboard, how to measure adequacy and sustainability of pension systems throughout the EU. I mean, the EIOPA perspective on this was more specifically, what data do you need? But the concept of a dashboard to enable comparability, taking a European perspective, I think is very important. Having said all that, I mean, pensions are very diverse. They're diverse because of different cultural and social and employment conditions in different countries. So the diversity needs to be recognized, but in such a diverse world, are there benefits from European and global initiatives? Yes, very much so, in my view. Thank you.
Very clear. Thank you. Elsa, from a more global perspective, what would be your take?
Sure. I think really, I mean, the work of the OECD through its Working Party on Private Pensions in particular is about sharing experiences and best practices. So obviously it's important to keep in mind that pension systems depend on national circumstances, national labor and tax laws, etc. So obviously they cannot be harmonized internationally, but countries can learn from each other. They cannot be like a one-size-fits-all approach to closing the retirement savings gap, but harmonization initiatives such as, for instance, the PEP, the Pan-European Pension Product, these are very positive. And for instance, in that particular case, like having something, the portability for people who change countries within Europe to be able to continue saving for retirement in an easy way. These types of initiatives are very important. But may I also take this opportunity to say that sometimes harmonization and portability of plans within one country is not necessarily enforced. So that's also very important to, I mean, these perspectives, it's very important to have like a global perspective, but also to kind of see where the issues are and to compare with other countries to see what can be done in that sense and learn from countries that may be a bit more advanced in their journey on the pension in the pension arena.
That's an important point as well, and we see that things are moving also within countries in a number of cases. But I would be very interested in Ilka's perspective on that. From a national perspective, what are your expectations from those discussions taking place at European and global level?
Both Elsa and Justin said to recognize the systems are diverse, that they have a tradition, that they have a history, and that they fit into the national landscape. And the other thing is we are learning from each other. And I think this is what also platforms like OECD with their work, European Commission can really foster, because this is something maybe sometimes not just learning, but benchmarking and to look what could work out better, what countries have gone one step further. But at the same time, I think it's important to recognize that we will hopefully never be able to harmonize all the systems that we are having. As I said, they fit into the social system, they fit into the political system, and the one size fits all will not work out. So I think there's a lot of work to be done to improve the systems, and I think every system has its own challenges that need to be tackled. So I think there's a lot of homework in every country. I don't see that any country already is on the safe side when it comes to demographics or when it comes to interest rate setting. So we are working on it, and I think that is one of the most important things. And of course, in Europe, we are a lot of different member states with a lot of different systems. I can understand from a regulator's perspective that it would be much easier if we were all marching in the same direction. But as I said, learning, I think, is one of the most important aspects here at that issue.
Thank you very much. I would like to finish the panel with two very short questions, if you agree. The first one would be to try to wrap up a little bit this whole discussion about the pension gap. If you could organize just one action to reduce the pension gap, what would it be? What would be the priority? Keeping in mind that, of course, this is a complex issue, multifaceted one. But if you were to pick just one, what would be your number one priority? Whoever wants to start. Ilka?
Actually, talking about the gender issues, it's women's participation on the labor market, career and labor market perspectives for women. I think this is one of the most effective ways to close pension gaps and to close gender pension gap. That is lying in the labor market, not in the pension system. I'm very much aware of that. We've listened to the ILO comment this afternoon, but that would be my recommendation. More chances for women on the labor market.
Thank you. Elsa?
Yeah, I personally think that the most important aspect is to simplify things for people to start saving or to increase their contribution to pension plans. So we know that the power of inertia is very strong. So communication is key so that people are aware and understand that saving for retirement is important to ensure their future financial well-being. But communication needs to be actionable. and people need to be able to save in one click at the end of a video or an email. Or so, I mean, we know from behavioral studies that nudges work, and that choice overload really can deter people from taking action. So I would say that reducing the number of steps that people have to take to save or increase contribution can be very, very effective. And I think this is something, a direction towards which we should be going.
Clear. Thanks very much. Justin?
Well, firstly, let me say I very much agree with both what Ilka said about the need to engage more women in pension saving and what Elsa said about simplification. I mean, I agree with both of those. Maybe just to add a financial one, I mean, if it was understood more widely that if you have a pension pot of €100,000, that will get you about €2,500 a year in an annuity, that you don't just have to save quite a lot of money to have good, particularly defined contribution pension. You have to save a hell of a lot of money. And I think that if it was understood just what are the sums involved, that might incentivize people to save more. Thank you.
Very important point as well. Thanks very much. And for the last question, I will build on a question raised by someone in the audience. The question is, what pension trend do you think will most impact the next pension survey results? And I would add, what do you think the next survey should focus on more, or any recommendation for the next survey you would have? You can decide either way you want to respond. Who has a view on this? Difficult question to finish the conversation.
I mean, if I may, maybe just the increasing trend to defined contribution. That, I mean, if you are, that what is striking is how quickly this is happening, and therefore a pension survey which manages to capture properly that an increasing proportion of European citizens will be in defined contribution arrangements, I think might start to shape some of the responses you get. Thank you.
I absolutely agree with that, and I think also it would be interesting to see whether the trend towards digital information continues. There are strong reasons to think that this should be the case. So it would be interesting to see whether people actually their preferences for digital increase, and most importantly, whether to know if other people who today might not be very comfortable with digital tools actually find that they are useful in the future. That would be very interesting.
Yes. I fully agree. That would have been my answer as well, actually, to say that the trends in digitalization and the impact on savings, on knowledge, on financial literacy, that would be very, very fascinating. Though, of course, we're having all the long-term questions that we are repeating, questioning, because we need to compare the shifts, the trends over time. But digitalization would be the one I would add as well.
Clear. Many thanks. Many thanks for these clear conclusions and for a very interesting panel discussion. Thank you to all the speakers for today's webinar. Many thanks also to all of you for attending and joining us this afternoon. I hope you enjoyed the discussion as much as I did. I would like to wish the audience a very good rest of the European Retirement Week. Please do not forget to join us tomorrow morning for the event that we organize jointly with the European Banking Federation and Better Finance on financial education. This is it from me. Many thanks again, and I wish you a very nice rest of the day. Thank you. Goodbye.
Thank you. Goodbye.